In today's video, we will learn why investing in stocks is the best financial decision, primarily because it comes with the highest interest rates of any other type of investment. So how can you make money in stocks? Well, it's so simple. But before that, please support my work by liking the video and subscribing if you are new. Thank you. This is how you can make money in stocks. First, I want to remind you that investing is as complicated as it has been made to appear by the so-called financial advisors and brokers, whose primary motivation is to make money through high fees and commissions. Investing is simple. Anyone can navigate it successfully with relevant information and knowledge. So what exactly are stocks? Stock is simply an ownership interest in a company. Companies raise the capital they need to operate by selling part of the business, and these ownership interests are known as shares. The investors who buy these shares of company stock are referred to as shareholders. Most companies, such as Facebook, raise capital through stock sales to the general public. Their shares trade on stock exchanges where anyone who wants can buy and sell them. As a shareholder in a particular company, say Facebook, you can make money in two ways. The first happens when stock prices rise, in what are referred to as capital gains. Usually, this is where the majority of stock profits come from. The second comes quarterly as dividends from the company's profits or cash flow. Dividends make up a relatively small percentage of returns on stock investments, and only some stocks pay them. Market forces determine a stock's value, how much people want to buy versus how much people want to sell. Therefore, if there is a significant demand for a stock after you buy it, you have a greater chance of earning a higher return. And if that return stays positive over the long period, you will start to earn returns on previous returns. That said, it's wise to invest now rather than later. The sooner you get your money into the stock market, the sooner it can start working for you year after year. This is true for all investors, but it's essential for women who tend to live longer but earn lower lifetime salaries than men. Liz, a technology industry manager in California, received a large lump sum payout from her company to settle a suit she had led, claiming she had been discriminated against in terms of her wages for many years. Liz felt good about the settlement, but when she got the check, she promptly deposited it in the bank and essentially forgot about it. In other words, instead of earning an annual return of 7% or so, the money sat idle, earning almost nothing given that banks are paying a fraction of a percentage point in interest on savings deposits. This story is doubly sad because after her wages suffered due to her company's discrimination, Liz's lack of understanding about investing led her to make decisions that hurt her financial future. No one can predict the future. However, history tells us that regardless of market uncertainty, stocks are the surest way to earn a relatively high return on your investments in the long run, no matter how small your investment is to start. Yes, history may change course, and this trend might not continue forever. But what are the odds of that happening in your lifetime? What would it take to reverse the long-term upward trajectory of the stock market? One question most people who want to invest in stocks often ask is, what if another pandemic happens? It is true that in the case of another pandemic, all past patterns will likely be irrelevant. But here's another question. If something as bad as a pandemic happens, will you worry about your portfolio? You will have much more to worry about and certainly won't be alone. Why not be optimistic and invest in stocks rather than worry about some possible pandemic that will wipe out the value of any cash you have safely put away anyway? While any investment is based on probabilities because no one can predict the future with certainty, investing in stocks is much safer. Yes, you can lose money in stocks in the short term, but if you are watching this video, it's because you are concerned with the long term. What will you have when you retire? How are you going to finance your lifelong goals? How will you provide for your family in retirement? I am sure you are not looking for stock tips to help you make quick money, but rather a way to reshape your thoughts about money in a way that will be life-changing. That means your investment portfolio is a long-term project, and that is where stocks come in. And the longer your investment time horizon, that is to say, the earlier you invest and the longer you can leave your money untouched and invested, the more critical stocks should be to you. Another question most people who want to invest in stocks ask is, what happens if the stock market stops going up since it's already so high? While there have been periods in the past where the market has hit the pause button for a little while, this upward pattern has always resumed. When you buy shares of a company, you are betting that the company will do well and continue to come out with new and unique products and services that will make them money. Sure, companies fail all the time, but you will not be investing in just one company. You will be investing in the market as a whole. Moreover, companies whose stocks are being traded don't stop being innovative and productive. When investors anticipate future profits or those profits materialize, investors will eventually buy the stocks, increasing the stock prices. In short, unless we all collectively decide to stop being innovative, starting new businesses, inventing new technologies, and designing new products, there will be money to be made in the stock market. That said, here is something you need to remember when it comes to stocks. Never try to time the market. Suppose you have been exposed to any investment advice in your life. In that case, you have probably heard phrases such as buy low, sell high, or heard investors brag about how they made millions by selling their shares just before a market crash and then turned around and repurchased them after the price dropped. After all, if stocks are subject to changes that decrease their value, doesn't it make sense to try to maximize short-term profits using this strategy rather than weathering the losses? The way the media and investment experts discuss the market implies that getting in and out of the market this way to maximize investment profits is possible. However, the reality is that for all their talk and expertise, people who engage in market timing to maximize profits are usually right only about 50% of the time, if not less. This, of course, means they are wrong about 50% of the time, if not more. In other words, they are guessing you have to stay put in stocks to make money. You need to commit to your relationship with the stock market, just as you would to any other relationship from which you hope to benefit over the long run. Yes, the stock market can be tremendously shaky on a day-to-day basis, but you have to keep your eyes on the ball. Investing doesn't have to be complicated, and anyone can succeed regardless of income level or previous market experience. In fact, the more complex your investing strategy is, and the more you try to capture short-term gains by timing the market, the more likely you will lose money in the long run. At the same time, loving money does not make you selfish or shallow, but quite the opposite. Loving money means you love the idea of financial independence and freedom to choose the life you want to live. It means you love your life and want to make the most of it rather than remain a wallower, always asking, what if? In addition, loving money means that no matter how easy it is to make excuses, investing and knowing how to manage or oversee the management of those investments properly is essential for your future and that of your family. Loving money is about loving yourself and respecting the hard work you have put into earning money in the first place, so that all that effort doesn't go down the drain. That brings us to the end of this topic. I hope this video has answered your questions about stocks and investing. If you have questions I have not answered, please drop them in the comment section below.